Hello everyone, welcome to our Wednesday Q&A. I'm Eric Griffin, President of ITM Trading. With me I have Lynette Zhang, our Chief Market Analyst. For those of you who don't know or are tuning in for the first time, we take your questions that you submit to us via email to questions@itmtrading.com. We put them on the screen here in front of us, so we ask them live, so you get a real, true, spontaneous, organic response. Today we did pre-record this one, so we won't be able to do live questions at the end. But nonetheless, the questions are in front of us. We haven't seen them. We're going to ask them so you get a live organic response. Spontaneous organic response.
Totally.
You're ready?
Let's rock and roll.
All right. Carl F. asks, with the collapse of another bank, so I think he was talking about
First Republic.
No, there's another one that's like
PacWest?
Yes. With the collapse of another bank, or the potential collapse, I'm not sure it collapsed yet. And the fact that whether we like it or not, we still need bank accounts to simplify paying for mortgages, utilities, car loans, etc. Yep. Which banks or what type of banks do you suggest using? Should I use more than one bank? How much money should I keep in the bank? These are all good, very good questions.
They are all very good questions. And, at least as we're recording this, we don't know exactly what changes the FDIC is going to make. But the reality is, and I really...
You hate to say it.
I hate to say it, but it would be a bank that's too big to fail. It's just that simple. And I think you've noticed that in all of these banks that have collapsed, they've all been deemed systemically important, but that's because there were venture capitalists in there or tech companies in there. So, I really hate to say it, but if you're in a bank or a credit union or a small local entity without anybody that the FDIC really cares about, or when they're ready for that run to become obvious, then, you will be bailed in. And in fact, I'm very glad that you asked that question, because this just came in from one of our clients, and then the consultant forwarded it to me. And this is actually from, let's see, I think this is from PacWest, and it's about the business checking account. And what it says, effective April 23rd, 2023, we are amending your account agreement for business accounts to include the below disclosure entitled Rule 370 Notification Requirements. All other information in your agreement continues to apply to your account. Please read this information carefully. And they send this out knowing full well that most people absolutely ignore this. Okay, let's see. It outlines certain account holders' obligations in the unlikely event the account becomes eligible for deposit insurance coverage. In other words, if the bank fails. Okay. If you have opened a deposit account on behalf of the beneficial owners of the funds in the account, because we are not legal owners, we're all just beneficial owners, guardian, executor, custodian, or funds held in some other capacity for the benefit of others, those beneficial owners may be eligible for pass-through insurance. Wait, okay, hold on a second. I'm going to take the first part, but wait, there was...
Well, as you're reading it, I was just going to say, some things that you could do also would be, you could keep your bank, but then have another bank, like one of these too big to fail banks, maybe it's Chase, for example, where you have a wiring instructions already set up, so if you needed to, you could move the money over should there be any trouble coming. That would be one possible strategy you could do. Not saying that it would work, because if if your money was tied up, it might, if you didn't catch it beforehand. But there's definitely ways to where you could swap back and forth. And then definitely I wouldn't keep anything more than the $250 limit in your bank account. And it doesn't matter, I did confirm this, if you have a savings account that's in your name and a checking account that's in your name and another checking account that's in your name, according to what I found out from our banker, is that the 250 applies to all the accounts combined, not each individual account. Unless you had like a business named, business A, business B, business C, business D, and they all had different EIN numbers, then the 250 would apply to each one of those individual businesses. But anything under your personal is all one blanket amount. Doesn't matter if it's in savings and 3 different checkings. If you had $250 in each, it's only $250 that's covered in total. That was my understanding from our bankers. So did you get to the bottom of what you wanted to?
No, and I didn't highlight it either, so we're going to have to do this again. But because it was something about bail-in, and I read it last night, and I said, oh.
Well, here, what we'll do is I'll ask the next question, and I'll read this really quick and see if I can find it. That way you can answer the next question while I read.
Okay.
All right, Ron H.
Okay.
asks, with the Libor scheduled to end by June 30th, 2023, will there be an impact on existing home mortgages?
There is very likely to be an impact because the valuation of the SOFR, the interest rate on the SOFR, is different than the interest rate on the Libor. And remember, they have put in safe harbor rules so that when you open up your mortgage statement, if your mortgage balance goes up because of these changes, which is the most likely event. I mean, we've never done this before, so nobody really knows how this is going to fully pan out. But what we do know, because we've seen it so far, is that as they push those interest rates up, the value of those mortgages go down, and so they can tack on more money, and that's how you would see that. But we'll see. We'll see, because again, this is never ever, it's a huge experiment that has never ever ever been done before.
All right, so Robert D. asks, when the reset happens and the digital dollar takes over, how do we know that the government won't just set the price of gold at $2,000 and silver at $25, much like they set the price when they called all the gold back in 1933?
Well, first of all, they're going to use it and at that overnight reset. I mean, that's what history tells us. Could they fix the price of gold? Well, if they're going to do an overt confiscation, because all of this price manipulation is a covert confiscation anyway, as is inflation. They don't want to call it confiscation because they don't want you to understand that. But understand that were they to do an overt confiscation, it doesn't say it, does it?
Nope, it must be on a different document.
It must be. I have to pull my laptop and find it because it was right there and I went, holy crap, okay. And I printed it out, but I didn't read it after I printed it out. Sorry about that. But when they are ready to do the confiscation, then they will. They'll take wherever the spot is. And you know, when you're talking about setting the price, you can do that so easily with contracts because there's no limitation really to how many gold or silver contracts that you create. But they would say, okay, if spot is trading at 2,000, they're not going to want you to complain about it, and they're going to want easy cooperation. So they'll say, and we'll pay you a premium, maybe 3,000 or 4,000 or something like that. And with most people not understanding that is so far below the fundamental value, they'll go, well, wow, look at this. It's only worth 2,000 and they're willing to pay me 3. Okay, you could take my IRA, go. That's why I don't hold gold in an IRA, because I can't do the kind of gold that I like. So, yeah, they will ultimately set the price if they're going to do an overt confiscation. But they have been doing a covert confiscation since the day you were born, whoever you is, each one of us.
Yeah, I mean, I know that's one way they could do it, right? They could definitely increase the spot price, but I think if they're they could just give you exactly what, they could do what they did in 33 and just say, okay, gold's $2,000 an ounce today, we're going to give you $2,000 an ounce. Silver's at 25, we're going to give you 25. And, if you're caught with gold or silver, or we catch you with it and you haven't turned it in, then the price, the penalty you pay is, back in 33, I think the penalty was close to 200,000. It was 10,000, but I think in today's dollars, it's close to 200 grand. Or 10 years in jail, or both. So they could just make it. They're going to tell you definitely it's a patriotic thing to do. The system's going down. We need everybody to help us strengthen the dollar. It's the patriotic thing to do. You gotta help out. Turn your gold in. They're not going to say it's a confiscation. They're just going to say, hey, give us your gold. We'll pay you the going rate for it. And then we'll back the currency with gold. It's going to solve all of our problems. But now that since the introduction of what all this stuff is going on with the CBDCs, and I know we talk about this all the time now because we get a lot of questions on it, but I think CBDCs is the reason why I think they're going to ban. I think personally, this is just my opinion, but I think they're going to ban all the exits. They're going to bar all the exit doors to the CBDC. Not initially. They're going to introduce the CBDC. They're going to get adoption. They're going to take away cash. They're going to take away cryptos. They're going to take away gold, gold and silver bullion. They're going to take away all these different avenues where you can escape from the CBDC, right, into other currencies. Now I don't think they're going to take away, art, collectible cars, collectible gold, collectible silver, like all these different collectible things. I think
because
those
the
will
people that own those.
Right. And eminent domain laws makes it a lot more difficult to get into that kind of stuff. But I think they ban all the other exit routes. So,
but not initially, because they don't want you to understand that they're putting you in a corral. How do you catch a wild boar? You just put up one side at a time, let everybody get used to it, and then before you know it, you've got all four sides closed and there's no escape. But it hasn't been as easy to get adoption as they thought it was going to be.
I hope they don't get any adoption.
Exactly.
I hope everybody wakes up to the fact that CBDCs are sinister and no one we can avoid it.
That would be ideal. And even when they do come out with it, because they're going to push us into it, there's going to be some huge crisis, and they're going to put all that money, the CBDCs, inside of the FedNow accounts, which everybody has a FedNow account, and say, you don't have to worry. Look at, here's all of this money in there, and they're going to attempt to get adoption. But keep in mind, we vote during the only way. Okay.
How funny is
George,
that? Right?
Yeah.
That's exactly that question's exactly what you were just saying.
Exactly. Could governments introduce CBDCs during a financial crisis by making it the only way to receive stimulus money, claiming it is faster and more secure? Therefore, almost everyone would sign up or else not get funds. You don't even have to sign up. You already had the account. All you have to do is use it, right? And what I try and get people to understand is because we've had this conversation, we vote with our purses or our wallets. So if you hold all of your wealth in fiat money, stocks and fiat money assets, stocks, bonds, annuities, ETFs, all of that kind of stuff, that's your vote, right? If you put your wealth in gold and silver, your money in gold and silver, that's your vote. That's my vote, right? Along with food, water, energy, security, barterability, wealth preservation, community, and shelter. That's my vote. So, it's not going, the only way to receive stimulus money, it's already in there.
Yeah,
all you have to do is use it.
It's definitely going to be one way. Like, that's not going to be the only way they introduce. So there's going to be a lot of different ways this gets pushed and as this great thing for everybody.
Yeah.
Right?
Yeah. Not a great thing.
Yep. All right, so Sally K asks, are the latest American Eagles, UK Britannias, Queen Bees considered bullion? Yes.
Yes.
And Canadian Maple Leafs, Silver Rounds, Krugerrands, all that stuff is considered bullion. Even if it's graded gold bullion coins like American Gold Eagles or Silver Eagles, it's still bullion. There's nothing collectible about an MS-70 2023 Gold Eagle. Somebody sent in like a 10-ounce Dragon, MS-69 Dragon. Well, so they wanted to sell it. So I called the wholesaler and I said, hey, how much you buy this for? He said, melt plus $8. I said it's an MS-69. He said, I don't care. It's not collectible. It's just graded bullion. So just remember that. I mean, just because something's even graded and it's in a fancy case or something doesn't mean it's collectible.
It's new, it's bullion.
There's plenty of companies out there that make their own commemorative collectible gold bullion coins to stick in an IRA. They're not really collectible. And there's nothing special about them.
Right. And you brought up the IRA. So you know that the way that I determine is if I can hold it in an IRA, not buying it. Now, I don't really feel that same way quite with silver because it gets used up in industry, but definitely with gold. If I could put it in an IRA, I'm not buying it, period. So that's a great way to know.
All right, well,
So-
that's all the questions we have for today.
Shall I go grab my laptop, which I have here? And
No.
because he can edit this. Because where I
Well,
saw that piece,
He can definitely edit it. I'd say do this part right here, and then we'll say goodbye. Then you can go grab it. We can see if we can find it and and we can
I
edit
mean,
it.
okay. Because I know I saw
So
it, or I
just
would
say-
never
I'll
print
just say
it out.
that's all the questions we have for today, so we can start there. So
Okay.
all right, well, that's all the questions we have for today.
Okay, well, make sure that you subscribe to Beyond Gold and Silver, because we need more than, this is your foundation, but you need more than that. Food, water, energy, security, barterability, wealth preservation, community, and shelter. And so we address all of those issues on Beyond Gold and Silver. And if you haven't done so yet, make sure and click that Calendly link below and start your personal gold and silver strategy and get it executed as quickly as possible. If you like this, please give us a thumbs up. Make sure you leave a comment, make sure you share, and make sure you subscribe. Because the reality is that physical gold, physical silver in your possession is your wealth shield and your freedom shield and your ability to continue to make choices. And until next we meet, please be safe out there. Bye-bye.